Hey everyone, Tony Ivanov here, and today it was a perfect day on the penny stock market. Today we saw AWX continue its squeeze from $2, and it gapped up today during pre-market to a high of around $35. Now that's a complete supernova move, and it's exactly what we needed to reignite the penny stock market. So if you know, if you've been watching the penny stock market for the past 2 weeks, you know that we have had almost no breakout price action, no follow through. Every stock that's had a morning spike has gone up, say 10%, and just collapsed all the way back down. So I knew that all we needed was to have that one supernova type squeeze to really reignite the market, and that's exactly what we got. So AWX squeezing up to $35. After that, we saw MYND have a big spike, which I traded for around $1,200 profit, doing the simple triple top flat top wedge that I've taught in the past. And we also saw SSLJ do a big gap fill from around $2.20 up to $3, and we saw other stocks like GBR and others also pop up as well. So within this video, I go over my MYND trade, and I just break down exactly what the pattern is and how to trade the pattern. And if you guys want to know a few other stocks that I believe are going to have nice gap ups tomorrow based on the same gap fill strategy that SSLJ was, make sure that you join my free Facebook group, the Trade Buddy community, because I post my watch list in there every single morning, and I'm going to have those two stocks on that list. So with that all being said, hopefully you guys enjoy this free little video lesson. If you do, please leave a like and hit the subscribe button, and if you want to be notified for every future video, make sure you hit the bell next to the subscribe button as well. And if you have any questions, concerns, or issues, make sure you hit a comment down below, leave a comment down below, and I'll be happy to help you out as soon as I can. Alright guys, so with that being said, here's the video lesson. I hope you guys enjoy, and I'll see you tomorrow. But let's just dive right into this lesson here on MYND while the market cools off a bit. So MYND, what's the setup? Why did this run, and why do we trade this stock? So just for some context, the past 2 weeks have been very slow in the penny stock world, especially in the low float penny stock world where we love to trade. We have not seen any follow through. We've seen lots of fake out breakouts, lots of stocks just not doing what we want. This causes traders to get hungry to make profits. You know, after having no profits for a week or two, traders get anxious. They want to see that big time rip, and they want to make money, but there's just no setup around. Then last week we see AWX go on a big time supernova squeeze, textbook supernova, from $2 up to $36. And the whole time this squeeze was happening, what was I saying, guys? I was saying AWX, if this one turns into a supernova, it's going to cause FOMO, the fear of missing out, because traders are not going to want to trade AWX, mainly because they're not confident in its spiking, since they have seen so many fake out breakouts. The first time AWX popped up, no one wanted to really trade it, but it just kept grinding higher and higher and higher, and it went parabolic. So once this hit $35, I knew that it's going to cause FOMO. So going into today, even in my watch list, let me bring over the watch list real fast. I was saying that with AWX going up so high, traders are going to want to see the same type of squeeze. So the next stock that spikes up, everyone's going to want to buy the breakout. So right here, AWX, absolutely insane short squeeze over the weekend as the CEO of Shirt Trader bought up over 1 million shares, locking up the float. Anything is possible at this point, and I'm sure traders are going to go a trade hungry for more. I personally won't trade it, but I will be looking at how it holds up and look at other stocks to see sympathy plays. So we saw MYND pop up this morning with some good news. MYND, bring the news over here. Essentially, they partnered up with another company and they launched a health plan for assisted living facilities. Not amazing news, but hey, it's good news. That's all we need. All we need are traders to flock towards the play. MYND has a low float, under 5 million shares, as you can see here. And we saw a big time morning spike showing that this has potential to squeeze. So once we saw that big time squeeze on the morning spike, I was watching MYND like a hawk, knowing that if this is able to break out, people are going to want to trade it. So overall, we see a big pullback on the first big pullback, and it's slowly grinding on up, and it tests basically 255. So that makes a double top. So what happens on the double top? What if I talked about all the time with trading? With trading, you have to be able to understand where other traders are within the play. So if you're a short seller who thinks MYND is going to go down, you are going to go short on the double top because you want to get the biggest piece of the pie. And if you see a double top, that shows weakness. So I can pretty much guarantee that there are short sellers who shorted into this double top because to them it technically was a lower high, so that caused them to be more confident in their shorts. So they had the short happen, short at 250 with a stop at say 260, just over the high of day, and we see this big pullback down to 225. So they're like in their head they're saying, okay, this is great so far, we're seeing a nice pullback, but then we hold support at VWAP and we get that squeeze, that big volume to surge up into the breakout, causing shorts to get squeezed. So now we have a breakout on the third test. That's what I always like to look for, because with my experience of trading stocks, I have seen that even though U-shaped breakouts do work, they don't work every time. But the triple top, if you're able to break out on the third time, it always has a spike. Now this one didn't spike as much as I wanted it to, but still the plan was to get into the dip as it's squeezing on up. You don't want to buy into the breakout because you're missing out on 20-30 cents a share. My plan was to buy this downtrend. That's why I drew this line. Buy the break of this downtrend as we saw volume run back into the play. So once we saw this big time volume come back in, because when you're watching this live, you can see on level 2 trading speed up, because you can see on the minute prior to this breakout, it only had 17,000 shares traded. The minute afterwards, 222,000 shares. Big difference, and you can see that right on the level 2. So once I saw this break of this downtrend, and once I saw the volume start to run back in, I hopped in with my 4,000 shares, and I rode this bad boy on up into the breakout. And half my profits I took into the 265 area, took the other half off as it broke under 250 to lock in my profits. So overall, the big time pattern is what works the best, guys. You don't want to try and trade every single little dip buy, every single little breakout. Look for the big time squeeze, and now look at MYND go. This is going even higher. So I could have made even more on this trade if I was more patient. But that's just fine. I made enough money on this trade. Locked in just over 1,200 bucks. So now we're going to go over some questions. Frank, what gave you the conviction to get in after 238 broke instead of waiting for the high of day? Just knowing how these patterns work. I've traded this pattern so many times, and I just know how it works. And I like to buy into the uptrend prior to the high of day breakout, because we have still seen, even if we get these big time rips, We don't always get the biggest pop after the breakout. More traders right now are still definitely selling into the resistance. So that makes me want to get in a bit lower than the actual breakout. And just the main thing that gave me the conviction to get in was just the huge volume that flew into the play. Like I said, the minute prior to this, you can see on the volume candles, we had a downtrend essentially forming on the volume. So what I usually like to do is once I see the volume increase over the previous candle, that gives me kind of the idea that, okay, this one's getting faster volume in the last minute. We could see this squeeze higher. And the thing with all trading is that you never ever know exactly what's going to happen, right? You never exactly know. And by the time that you do know, it's too late to get in. So it's a combination of just having the guts to try it out and having the previous history of knowing how these overall patterns play out. And of course, the big thing that helped me have the confidence to get in is just that volume. Volume is the most important thing in the market. Prices do not move unless there is volume. That's the key thing. So once I saw this downtrend break, once I saw big volume come in after that downtrend break, I said, you know what? This is the time to get in. I don't want to miss out. I'm going to jump in here. And apparently so did tens of thousands of other traders. As you can see, we got huge volume spiking on up. So you can also call this an ABCD pattern. We have seen that also before. So an ABCD pattern, what is that? Let's get a nice little infographic. So ABCD, what is that? We have a morning spike. That's A. We have the first big pullback. That's B. We have a lower high form. And then the dip after that lower high makes a higher low from B. And then D is the breakout. So we kind of see the same thing here on NYND. Not exactly, but it's kind of there. And I'll just label the areas where I think the ABCD are. So this is obviously A. This is obviously B. C, I would say, is this. And then D, of course, is the breakout. So you want to buy after the C pullback as it runs into D. And the best way that you can visualize that is by trying to identify a trend line that holds down this pullback. And this one had a perfect one, which I drew earlier, right there. So overall, great pattern here in MYND. I was talking about MYND for the past half hour. You all should have been either watching this or trading this. But, you know, great pattern that everyone should be focusing on as we start to see the markets kind of heat back up.